in paradise, and it is beautiful Las Vegas. Yes. Um, would you get me my purse, my glasses? I can't see. I don't have my glasses in my purse. And just bring me my purse. That'd be great. Okay, everybody, what's going on in Las Vegas? Well, we're holding steady. The median price today, this morning, was $425,000, which is 425,000, which is super duper because we're holding steady with all the interest going on. The interest rates go up. We'll see how that impacts it. It'll take a little bit for that to show an impact if it does. But as our price holds steady, I think that our market's going to be steady. We have been selling 88 homes a day this month. And it's not last year's numbers of 138 homes a day, but it is better. So that's the good news. And I think the interest rates, people will get used to them, and then I think that they will go down. I know I said yesterday or Wednesday that's a political issue one way or the other, but we shall see. Yes, we have 29% of our market is that $425,000 and under market. And it looks like 14% of the available homes are $1 million and over. Just like 30% of our available homes are 425,000 and under. And those are some good stats when you're out there doing listing presentations. Unknown caller. Sorry. Listing presentations, which you hear me preach all the time to get a farm, get a farm, get a farm. And we're going to need more listings. And I'm going to show you that in just a minute. I've shortened, if you notice, I shortened this chart. Jimmy's been telling me I needed to do this for about, I don't know how long, a long time. And I know I showed you the other day how I took the chart and created a graph with a chart actually from the stats with this information. So I put it into a chart, and I will work on that again this weekend and hopefully get it to where it is doesn't take me so long to do it. Right now it takes a while. Anyway, practice, I guess. I wanted to show you what I did. So to that point, what I did is, so I took like the $1 million stats and I put them on a chart by themselves, or on this, this isn't really a chart, but what I'm going to do, I'm going to move the numeric information to the left, and I'm going to put a chart over here to the right. And I'm going to do that for each category, so that depending upon what market you're addressing, you can pull that sheet out. Then you can, if they ask about a different market, you have that sheet to pull out as well. So I'm going to make it a little bit more organized for you, a little bit more presentable, hopefully, with the new the graphic for it. So if you look at this particular chart, you'll see that we're, the $1 million homes, where we were selling 2 a day in 2020, 4.5 a day in 2021, down to 4 in 2022. And now this year, and I will tell you, if you haven't been watching, that we have continued to climb. We were down in the 1s. Now we're almost to the 3s of how many daily sales there are in the $1 million plus market. So the $1 million buyers are still coming here. And of course, we have beautiful $1 million communities to show them and to sell them. The other chart that I have created, the graph that I'm going to do a chart for, is this one. This is Clark County. And from 0 to 425 is 61% of the market sold. The market sold. Now, this is different than the market that's available, okay? This is year-to-date market sold is 61% median price and under. And then 25% of the market is the $425,000 to $600,000 area. And then from 600 to $1 million is 10% of the market and sold. And then the $1 million market sold is 4%, and high rises are 2%. So that gives you a good idea maybe of where you want to farm. You might want to take that 61% of the number sold and go after that market, because statistically speaking, you have a better chance. So you might want to think about that. Then you might think, well, I'll do a little bit more work, spend a little bit more money, make a little bit more money, and do the $400,000 to $600,000 market. And you might have the same mindset. Now, when you get over 600 to a million, which is only 10% of the market, yes, you make more money, but it really costs more money, and you probably are going to need a virtual assistant, if not an in-office assistant, to help you, because it's a tough market. It's a very tough market. The competition out there has been around a long, long time. You all know Ivan Shear. He's been in this market for a long, long time, and he's even grounded in California. He does his marketing over there as well. And guess who moves here and buys those $1 million homes? The Californians. That's a big percentage of them. So he's done his market research, and he's grounded in pretty well. He just opened a place at downtown Summerlin, a retail store. So he's doing all the right things to address that market. So if you're going after that market, it's going to be tough to compete with him. Not that you can't, but I'm just telling you, it's going to be tough. So unless you have a really good niche and some really good marketing and all your ducks in a row, it'll be hard to compete with him. And I'm just saying that's a tough market. But if you look at the $400,000 to $600,000 market, that's 25%, and that's not a bad market to go after. The other thing when it comes to niche markets is condos. I remember Liz Mullen used to work for us years ago before she retired, and she was the condo queen. And there was nobody that sold more condos than she did. And that's a niche market. So, and areas are niche markets, and your neighborhood's a niche market. So get niche and get rich is what we used to say. Okay, let's see what else we have here today. Of course, we have our regular full-blown market stats. And one of the things I didn't cut out today was, and put it separately, which I will though, is the non-owner occupieds. Now they've gone down in daily sales, down to 20, and they're less than 30% of our market. Now they're only 26% of our market. And I'm not sure why, except that interest rates might be impacting it, because whether you know or not, a lot of the investors will buy cash, pay cash for a house, get it rented. Then they will take money out of that one to buy another one, because now they have a lease on the first one. So it's not going to impact their mortgage application. So sometimes that happens in this type of market that we've seen in the past couple of years with the rents going up. So basically what I'm saying is they may be impacted by the higher interest rates. You get it? When the interest rates were lower, they could possibly even get 3 homes when they had cash for one, and move it up that way. It's just a strategy for investors that many investors do. And I know they do it all over the East Coast, and I'm sure they do it here as well.